Hey, good morning. It is Wednesday, November 20th, ahead of the market open. Real quick, let's make a new video. Talk about GameStop for a second, take a look at that daily chart, add a little explanation behind those $125 puts we saw for January yesterday. We'll just add a little bit of more context to that and jump right into it here this morning. Hope everyone is having a good day so far. Let's get into it. Yesterday, about 30 mil total premium. We did notice the net premium, about 1.6 mil, start to creep up into the afternoon session as we saw GameStop move around 27. Did see a little spike in that premium, and then into the afternoon session, GameStop did move up there with the net call premium. From the morning, for example, was like negative 1.2 mil call premium, and then all the way up to 1.65 there. So about a 3 mil change there, 2.5 on the way up. So not bad there in regards to the actual premium there. If we take a look here, like some of the highest volume contracts, I'll let you zoom in on that. We'll take a look at what was the volume looking at yesterday. We had $30 calls yesterday for this week, the 27s, the 30s for next week, 28s for this week, 50 for this week, 35. Those are some of the highest volume. And we'll take a look at some of the hottest contracts. We did see $125 calls for January on some volume as well. A lot of those, again, split between the bid and the ask. Nothing real definitive in terms of direction. Now, we see here, for example, on the $35 call for this week, 71% towards ask. Let's take a look at that just for a second. Sometimes see what the actual transaction was. We'll look at the 1 day here. Take a look at some of that volume. So yesterday we had 4,800 volume. About half of that did appear in new open interest today. So that's something you kind of want to see, especially maybe some bought to open positioning here as a, let's see, like I said, 4,800 volume. 2,000 appeared in new open interest. That was only 75,000 premium, but you can see that large candle there. That's why that surfaced. Let's see, ask 3,400 yesterday, bid 1,200. Some more on the ask side, and you did see that appear in open interest. Those are 28% out of the money. So they were filling, let's see, a low of 10, hit a high of 23, average of 15. Not bad, still out of the money weekly, very risky in that regard. Historically, though, volatility I know has been creeping up a little bit here, 120% yesterday. Like I said, about 30 million total premium. On Tuesday, roughly the same. On Monday, larger day last Friday with the 55. So, but let's take a look at the price because Friday we had saw that 28 number again. And I want to jump over to the chart for a second. We'll come back to some of the flow. I've been talking about the year-to-date volume weighted average price, 27.21. Had posted it on X over the summer because we'd actually saw those same levels as price was moving back up in July. We saw that come into play right here again, the volume weighted average price. And this is just going back all the way to January 1st. So we can see how GameStop reacted around July when that happened. And then this time it's been a little bit different story. So if you notice on the chart today, we got a purple line here. What that is the point of control. That's deriving from this little indicator I'm using here, which is called volume by price. I've got that also anchored to January 1. What that does lets me know by the price where the volume has been going down. Where's the bulk of that volume? And it's been right here, 2482, 2484 to be exact. 224 mil total volume in that price range, which is why that $25 level has been so significant with the gamma. We talked about that ahead of the move as we started retesting 25 post-election. We had, if we're looking at the volume down here, leading up into the election, it kind of started to pick up. And then post-election, as we moved above that point of control, note the volume the last few sessions has been increasing. That's what you want to see as GameStop not only moved to kind of establish a base at 25, but kind of moved above a base at 25 and has been holding above that. Kind of using that volume weighted average price as a magnet. And we've had quite a few sessions around that number. So let's take a look here in pre-market where we're trading at. Let's see, 27.30. So still right above that volume weighted average price of 27.21. So something you want to see, something positive. It's kind of nice seeing not only consolidation above 25, but just kind of in this range. So is this the new range? Is 25 the range? Is above 27 the range? Not sure. We'll just continue to follow the price, continue to follow the volume in that regard. But always interesting to see when that's moved up. I mean, if we look, pardon me here, if we zoom out and go back to, like, say, the beginning of the year, really stretch out this chart for a second, kind of give you like take a look at that here, where we've been, besides for those peaks this summer. I mean, where GameStop started out at the beginning of the year and where it's at now is in a great spot. So there's absolutely nothing to be wrong about or nothing to be mad about there, on the long term. The only thing that gets people most upset, I believe, with GameStop is when weekly call options expire worthless, and there were ways to avoid that. My last two videos, I had talked about, just how to avoid that IV, why that's spiking on you, what's actually happening there. And it's something kind of important to watch out for. So I want to jump back over to the flow for a second, and we'll take a look at those hottest contracts that came through yesterday on GameStop here. And we notice here I sorted them all by premium, so the highest premium. Now we did see on the $20 calls for see December 6th, see 992 yesterday. Volume at 980 appeared a new open interest. Most of those looked like, let's see, sold to open interest increased. Let's see. Bid side, there's more towards the bid, no open interest. Was not any multi-leg trading. It was the day before, but 600,000. Somebody could be selling $20 calls for December. Hoping to gain. Because if you sell a call, you have to buy the shares essentially in that regard, or have your shares at 20. So yeah, it's interesting there. We'll follow those up because usually I've been seeing rolls from 1 week to a couple weeks. So this one here, 613,000 total premium, 992 volume. We'll just continue to watch that. Then, like I said, the day before too was also some selling. Let me zoom this back out here just a few days. So just that larger block yesterday. Okay, just something we'll watch for there. Selling in the money call. Nothing wrong with that. Let's see, the 27s also is the highest. Again, all day yesterday was buying and selling. Nothing too definitive in that regard. Although there was 10,000 volume yesterday, there was nothing appeared out of that in new open interest. Now the contracts did move, for example, from about 50 towards the end of the day to 100, so they did double for that was originally, let's see, the price under 27. So those were kind of right at the money and then went in the money. So that's kind of cool to see in that regard, especially on something that was slightly out of the money in the IV. But let's talk about these $125 puts. I know a lot of people are like, hey, what's going on with those? We had the premium yesterday, 4.7 mil. And I'll give you the real quick math on that. For example, the real focus of the $125 put is basically just to derive at $25 shares. So think of a deep in the money put essentially in this regard is like a short position. So for example, if I sell a $125 put for January, we'll just call it easy math. We'll just call it because they were trading, I think yesterday, let's see it, 99.35, 100. So we'll just call it $100. And because these are contracts in shares, that's 100 times 100 shares. So that's essentially 10,000. So say for example, I sell a $125 put for a year from now on GameStop. I'm going to receive a credit of $10,000. Okay, that's the premium received for the transaction. Now, with that 10,000 received, I'm essentially exposed because I have a deep in the money put option. So, for example, how we get to that 25. So let's say it's $10,000 is what it costs, okay, or what I received in premium credit. Now, if I was to go out and say buy 100 shares, at the current price, 27.30, based on that. Let's see, 27.30. It's right now. I'll just say it's $2,730. Well, if you look at you can use Robinhood, for example, is a great way if you have Robinhood. Just add this 125 put to your options watch list. And it'll make it kind of easier to kind of follow with what I'm talking about there. But for example, like the break even price, if we go by like this, the 99.30, or we'll just call it 99. It's 99.35. We'll call it 99.30. You'll look on your app if you're looking at Robinhood ahead of the market open. You'll see the break even's 25.70 because how you get that is the strike minus your current market price. So you have the strike of 125 minus the 27.50 or whatever you're going with for your close number. That's going to be the value, the intrinsic value of the option premium. That's how that's derived there. So say, for example, I sell. You're like, well, hey, Wolf, if you sold an in the money put Aren't you gonna have to buy shares at 125 each? Yeah, I might. A market maker would happily sell me shares at 125. So how that? You said, well, how does that math work then, Wolf? Why would you buy 125 shares? If one contract's 100 shares, that's $12,500, and you're right. And here's where that $25 share comes in to make it real easy for you on the math. Like I said, that's 12,500 if you take 125 times 100. But you got to remember, I already received $10,000 credit for selling the put contract, which gives me basically a net cost of $2,500. And if you divide that by the 100 shares, we derive back at the $25 per share. So, for example, I'm short GameStop and I need shares at $25. This is one way I could do that. You might ask, why wouldn't you use a different option chain? Well, when you use something deep out of the money like this, or pardon me, deep in the money put option, it moves with the underlying. So the premium is basically always going to be exactly the difference of the strike minus the current contract. So, for example, back when GameStop, let's see, back in May, when GameStop was around like 18, these were trading at 105. So that's just the difference of the 125 minus 18. So it's around 107. You can see here when those were trading, let's see, at 105 back in August. So that would have been when GameStop was around 20, if that makes sense to you. So really the idea there is just think of it as like a short position and to gain $25 shares or to control the price at $25 shares, meaning you can get the fill, in that regard. So, for example, if you were to buy on that same example, you say, well, hey, Wolf, what if I wanted to buy one for 10,000 so I could sell 100 shares at 12,500? Now I know that sounds weird, right? So let's run the math for a second. So you spent the 10,000 because you wanted to sell shares at 125. So you received 12,500. Again, you're right back at that difference of 2,500, and then divide by 100 shares because that's 100 shares per contract is right back at that $25 share price. So that's just kind of what I wanted to tell you today or talk to you about and make that easy to explain. And I posted about this back in May before when we saw these same puts start appearing, the 125s for January and then the 120s and the 125s. So I had shared that back then. You can go back. I think I had reposted that tweet with, so you can go back on my feed and actually look at that, kind of make more sense to you so you can spend more time with it if you want or pause the video. So here, for example, on the selling the 125, we call that a short put. So a short put obligates you to buy 100 shares of the underlying stock at a specific price if assigned. Meaning, if we were assigned on that, we'd have to buy those shares at 125 each, which comes out to 12,500. But divide by 100 is 2,500, or 2,500 makes it $25 a share. So this is a neutral to bullish bet that profits through time decay as well as the underlying asset going up. So you take a short put here on the assumption price is going to move up in that regard. And then I'd also shared let me pull up the max loss on there. Basically, you receive the net credit, which in this case 10,000, but at that time was the 10,700. And then the max loss is basically just your capital required to basically exercise. So you got the 2K in collateral, invested capital or IC is required, and then your max profit. So that's how they would control their price or in relationship to like $25 share price. And then, for example, here the long put would be the opposite of that. Like I said, buying one. Long put gives you the right to sell 100 shares of the underlying stock. This is a bearish bet that profits on the underlying asset going down and outpacing the negative effects of theta and volatility. So in short, like I said, these deep in the monies, they'll move with the underlying, so they're going to stay tight. So they're not as they're not subjected to, say, the risk of like an out of the money weekly call option. They don't move with that same volatility. The premium is just going to be the strike minus the current prevailing price because it is so deep in the money, if that makes sense in that example. And that's what you saw yesterday. Now notice some of these selling here, these 125 puts back, in July, so they're getting a higher premium, 105, so 10,500 versus the 10,000 there. So it's not like you're essentially, I guess in one way, if you wanted to, there's plenty other things you do and you wouldn't really do this. Sure, you were selling them for 10,500 here, and buying them back here at 10,000 and making $500 each one? No, not really. The objective here is really just simple math and the idea around the 125 share, or pardon me, around the $25 share. Like I said, how we got that, if we want to make it simple, is the 125 minus, let's say, a $25. If GameStop was trading at 25, then that would make it 100 or $10. So basically a $10,000 contract, because everything's times 100 in terms of contract. So that's that premium you saw. If we go back historically, let's see, we got yeah, back in May. See, we can see where that was happening. That's where I first posted this about the 1820 mil as it was moving up. So that was like, if it moves up, you're protected in the intrinsic value. It moves down, you're protecting the intrinsic value, and that just refers to that $10,000 essentially per contract. So we look at some of those volume yesterday. You can tell they were individually, because the total volume I believe yesterday on these puts, let's see, was only, let's see, 480 yesterday was the volume, and then plus 240 appeared new open interest. So maybe half of those appeared in new eyes, split between the bid and the ask yesterday. Let's just confirm. Bid volume 189, ask, but like I said, the value of these is like almost identical, so it wouldn't matter buying or selling. You're going to get pretty much the same price on the fill. So what you're looking at here is really 480 times 100 is just representation of 48,000 shares. Considering GameStop has 446 million shares outstanding, it's just a drop in the bucket, but the amount of premium is what got people going. But just remember, it's kind of geared around, just think $25 shares in that regard. That's kind of the big gist of what I wanted to talk about today in regards to like those 125s, what that was. Because in reality, I mean, we saw the 20s, the 30s for next, let's see, 30s for next week. Albeit there was 8,000 volume yesterday. About 1,800 appeared in new open interest. But those did move from about 50 all the way to 100. But they are out of the money for next week, about 9% out of the money. Let's see what else we saw there. The 25s for January, I did see those. We did see some volume, 1,000, and then a decrease in OI. Appears to be some selling there. Now they might have sold, taken some profits, might have sold thinking it wouldn't close, above 25 by then. They would, if that was the case, they would kind of be out of underwater in that position. But zooming out a few days here, might just be as they came down. Could have been some selling. All these contracts are bought and sold. Sometimes they're really definitive, like when we saw Roaring Kitty loading call options. Sometimes they're extremely definitive in direction. Other times you can see here, split kind of right down the middle. Let's look this week though. We saw those 28s, which went in the money toward the close there, 73 and then 30. So 30 to 73, not bad. As they went closer to the money, they're at the money. Because let's see, our high yesterday of 27.60. So the days before 28.58. So what I'm looking for here, GameStop, I know. Look, it kind of sits on that little volume right there. Yeah, it's a little scarce up here, a little heavy here, very heavy down here where we were volume wise. When you look at like price compared to the whole year. So what I would like to see, if we're going to talk about moving up, we'd like to see this. I need to see something higher than 28.58. And above that, I need to see 29.79 to make that idea of 28, 29, or 30 a real reality. Those levels need to be seen, tested, consolidated around, and maintained. That's just because I feel like price has memory. It remembers where it's been. It remembers where it's going to go. Price also moves along moving averages. It also moves with sentiment, news headlines, option premium. There's a lot of different factors there. But in reality, when you look at like moving averages, that's something kind of why I stick with moving averages, or looking at like your volume weighted average price. But let's see how that actually correlates as we wrap this up, because I know you're very busy this morning. But let's take a look at actually how that correlates to some of our Greeks for the options. As we talked about the last few weeks, the significance of the $25 level. We saw a lot of gamma kind of ramp up over that 25 because we had that highest open interest around that 25. So we're going to pull up here our not dusty, but trusty unusual whales here. Pull up some Greeks here real quick. I'm going to pull up this. So we take here a look, and as I suspected, our highest open interest now has climbed to 30. So if you go back to last week's video, pardon me, I need a little drink of my coffee there. We see the last couple weeks there are we were target around the 25, and then the 30s were out there. You see now here, highest strike open interest 25, 27, 28. So see, there's a little bit of little stickiness there with where we're trading that, and then any move, like I said, above those levels brings in a 30. Now we've talked about spot gamma before, the net gamma exposure, gamma per 1% price change, but I will pull it up here again. This is the assumed value of gamma exposure market makers need to hedge per 1% change in the underlying stock price. So positive value is long gamma, negative value is short gamma. So 1% move, stocks moving up. Here comes a little bit of gamma that comes along with that little hedging. So for example, when you buy calls, they're closer to in the money. There's a delta there. You know, market makers got, or options dealer has got to have shares to basically hedge against what they sell or buy to you. So we're buying a bunch of calls, they're going to buy a bunch of shares, which can further increase buying pressure. And as calls are sold off, they sell their shares, and then you see downside pressure. That's kind of the short and sweet there of that hedging. But you can see that kind of ramping up there at that 30. If we take a look over here at gamma, so we look at like our spot, a daily gamma exposure, price moving up, gamma moving up a little bit there. So that's just the assumed gamma exposure market makers are exposed to. Kind of goes along with what we had talked about there. And then let's see, yesterday, call gex and then net gex. So net gex again up today. Kind of what you want to see in that regard. Gamma exposure by strike though, again, it had been at 25, you know, and now it's dangerous. Not dangerous. I don't want to use the wrong word and get everyone hyped, but let's just be reality. Look for those levels. Trade the price, trade the volume, not your feelings. But net gamma at 30, that net gamma at 25 that was high is what kind of got us from the 22, 23 hump up to 25. Then we had the incredible accompanying daily volume right here, which really gave us that strong push with that gamma. Because as price was moving higher, that became a little bit more expensive on the end of the option dealer market maker to hedge against that upward move. Well, now that's kind of built a ramp to 30. So as you get to those price levels, that then can continue the ramp, you know, to upward strikes, 35, 40 out there. But let's focus on the ones like 27, which are in the money right now, 28, and then it just kind of ramps to 30. And then by expiry, where is it happening at, Wolf? Where's the action? Again, a lot of GameStop is usually week to week. It's every week it builds up for the next week and then the next week. Last week was the monthly option expiry, so it's different now. So this week, net gamma right here, pretty high, and then for January, followed by next week. So it kind of builds and then ramps into the next one. And that's kind of what's been happening there. So we take a look at that delta exposure by strike again. Net delta pretty strong at 25. It starts increasing there, 27 again at 30. So it gets exciting. You see those price levels like I referenced on the chart, and that really brings those into question. And that's all I'll say about that. I'm not big on hype, just facts. We don't know what will happen. I can just tell you as price got closer to 28, 29 and brought in those $30 calls into option or into play, things start moving in that regard with volume and volatility. Now, with volatility comes how your weekly call options get crushed. We talked about this last week as I was telling everyone, hey, those 30 and 35s that everybody keeps buying, if you're not going to capitalize and take the move when it comes, you're going to get wiped out on them. And most people got wiped out holding into expiry. I try to explain how that works. The spike in volatility drives it up. It gets you excited. You buy it. Now you're already at the top. Volatility comes down, wipes the premium. And then it's like, you're mad at the system. In reality, it was just a bad trade. It was out of the money. Just keep your money in that regard. Or buy closer to the money, or in the money, at the money. Or in that situation, truthfully, instead of just lighting your money on fire with options contract, just buy shares if you still feel that way. Only because the shares won't lose that theta. They may move up and down with the volatility, but they're not going to be taken away and wiped to zero come Friday expiry. I saw all of the calls, the 30 and 35s last Friday was all the same scenario. They were loaded up. People thought, hey, this is it. Why weren't they coming back? Because as you move closer to expiry, the price could even be higher than it was the day before, but your option contract's cut in half. People really don't have any problem selling you those option contracts, knowing more than likely you did not take the profit intraday, like through the week, and scalp them, and they're going to expire worthless, and they kept your premium. So let's avoid that. Let's get you acclimated with not doing that, and maybe you'll make the premium this time. Because honestly, I just like to see others lose less and win more here. That's my only bias here. Just here to help. Just here to see others grow, learn, share. That's really what it's all about. So, like I said, if you move closer to those price levels like we talked about, that's only when you would see that come into play. Those levels again, I need to see above 28.58 to get me excited in that regard, and above 29.79 to really make that gamma 30 kind of a reality. So, but I like the volume. I like what I'm seeing so far. We like the sentiment. We know we're around the corner from quarter three earnings, so we'll be looking for a press release on that. But yeah, just wanted to say also big thank you to everyone that has subscribed also to the profile here or to my page. I do post content, post trade alerts. For example, we alerted you'll love this one. I know. I know. Last week, I alerted the Tesla 330 calls for this week. Manage your risk. Might be an opportunity to watch if we see a bounce in net call premium. Size accordingly. Not a recommendation for buying or selling, just an idea I'm sharing. Let's see. At 820, I liked them. I liked them the same day because they popped to 950. I liked them as a swing over the weekend. I liked him as an entry on Friday for those that were grabbing him Friday at 600. After or because I got him Wednesday, scalped Thursday, low again Friday. I liked him Friday. I liked him again Monday. Those went from 820 to 2100. So about $1,200-$1,300 profit per contract. Not bad for a $5 sub on X. Not bad. A lot cheaper than those other big fancy discords. No, I'm just kidding. I love all those great. Everybody's got a room or something they belong to. So I just had to, throw my own bone out there for $5. But I know I was proud of it. It was a nice little alert. I know my subscribers were eating well off that. We've been eating very well off Tesla. I've been posting a lot about that. It's been a very good name to trade. But we're going to watch the volume today. We're going to watch the options. We're going to take a look at all of it. But yeah, you can go back through this video. It'll be available. Bookmark it. I know it's longer. A lot of people are like, hey, I can tell by the analytics. A lot of people don't watch these all the way through. And that's fine. I'm still going to make them. I just know that for the few that do make it all the way through that really want to learn, they have no problem committing to 28 minutes to watching the video to improve their trading. I wish there were these kind of videos back when I started, because I've probably spent more time and money like researching education, whether it be trading groups, mentorship, about trading in that regard. It's education is important, but I also come from somebody's got a bachelor and a master's degree in computer science, so I'm a really big fan of education. But with trading, with anything in life, you're going to get out what you put in. I know some people say I don't have time to watch it, and you don't have a lot of time to watch this ahead of the market open, which is why I suggest bookmarking it. Go back to later. I'm long-winded, but I have a lot to say. Can't really get all that within a post, but I do appreciate. Please send me questions if you have any DM reply. I try to get back to everybody. You know that. I hope you have a great day. Happy Wednesday. Happy trading. Stay safe. Remember what we talked about with the weekly call options. I just want to see you lose less and win more. And to be honest, I just want you to have a great day.